Free use living on the channel is for educational purposes only and is not intended as financial advice. It's Sunday, setup Sunday. Not much going on in markets generally. I think we're getting closer to an increasing volatility event for a variety of reasons, which I'll discuss in the back half. Here's my brain dump of things that could affect crypto, both good and bad. On the left, we have more of the, exogenous non-crypto native list. The right would be the things we think are important, but maybe don't matter at all in the grand scheme of things. Are they really going to bring in flows, attention, positive sentiment? Probably not. We hope that the real world asset thing, for example, will eventually bring people in. Even if it does, what does the value accrual look like for the chains or the side chains or whoever else, the layer twos that are supporting that? It's just something to think about. So for headwinds, I'm sure there's more, but in a bearish sense, we're facing rates still high, inflation still high, dollar strength. This is, specifically US dollar, right? Oil and commodities strength, and the US consumer, I'll say weakness, right? They're having to pay back student loans, retail spending is down, savings is running out, stimmies are over, wages not quite keeping up with inflation, etc., etc. I think that's all in that bucket, right? Now, realistically, all this stuff is kind of related, right? Because if Binance goes down, then I think the odds of an ETF skyrocket immediately the minute after that, right? We can say like, oh, Binance exploding is a bad thing for crypto. And that might be true. It might be terrible for crypto, but it'll be great for Bitcoin, I think. And it'll be great for the detractors suggesting that offshore exchanges have control of price or something like that, right? I don't want to see Binance explode, but there's a lot of smoke. I'll get to that in a second. We've got still got US regulatory guerrilla war. Clarity would be great, but I tell people be careful what you wish for. There was a really amazing talk from Bill Gurley. I'll put it in the description of this video, talking about the regulatory regime in the United States. Then we have the Ukraine war, which is inherently inflationary, and a lot of people are talking about the potential for China going after Taiwan here, really because their economy is super weak and they have super high youth unemployment. And when you've got a lot of young people with nothing to do, one thing you could get them to do is to draft them and have some sort of action, military action, right? Not a direction we want anywhere to go, but I think people are increasingly suggesting that possibility. So I can't imagine that the geopolitical ratcheting up of tensions would be good. I doubt China would do that in its current state because they haven't fully divested from the US, but in any event, that's still maybe becoming increasingly likely. As far as the bullish stuff, we'll kind of know what the bullish stuff is. Having in about 200 days, ETFs, global debt, liquidity, death spiral, fiat exploding, right? We're seeing various waves of that globally, which I won't get into in this video. Some of the crypto native stuff, real world assets, debt instruments on chain, private equity on chain, real estate on chain. This has been tried in various ways and forms since the ICO days and probably even before that. It hasn't quite been successful by my measure. That doesn't mean it can't be going forward, but it's certainly something that could bring flows to crypto that don't already exist in crypto, right? When we're talking about layer twos and DEX dominance, that to me is more of a crypto native excitement narrative where that doesn't necessarily bring in outside capital. Stablecoins I'll get to in a second as well. Kind of goes hand in hand with the real world assets. Really, it kind of does permission DeFi pools too, and layer twos. All this is kind of a giant amorphous, maybe this is how this is going to work idea that people are still trying to put together. Layer twos, I won't go into any further detail, but there's a lot of just randomness going on, right? Maybe it's like the ICO days where 6,000 projects launch and 0 survive. Like, I don't know, but there's a lot happening on layer twos right now relative to anywhere else. Layer one consolidation would be interesting if, let's say, Polkadot or AVAX or some other layer one that isn't doing so hot. If projects start to leave, dApps start to leave those chains, side chains, subnets, whatever, and move to Ethereum or move to another layer 2, right? We haven't quite seen that yet, but I think we might start to once more of these layer 1s potentially just kind of go by the wayside. Like EOS, right? Or Zcash. Those are my classic examples. DEX dominance, again, I think if there's issues with Binance or centralized exchanges, DEXs should get more popular. If there are regulatory issues that pop up, DEXs will become more popular. And it would make sense, let's say, if onshore US exchanges can't list certain assets, they're listable on a DEX, right? Nobody cares. Go to Matcha. Oh, you can't access from the US? Well, you'll find a way, if you know what I mean, to access a DEX with a wallet. Oh, MetaMask is requiring KYC AML. Guess what? There's 3 other ones you can use that don't care who you are. Drive chains and Bitcoin's NFTs are kind of again, an internal thing. One thing to think about with drive chains going forward, like I'm talking months from now, if there's some sort of impasse where there is a chain split and we have an ETF, what happens? Just something interesting to think about. Does BlackRock vote for the drive chain, for example? Ordinals are still slowly, happening transactionally, but fee-wise down significantly. And then kind of all the rest of the 2022 plus assets that need to get figured out with Grayscale and Gemini Earn and FTX and even the Mt. Gox assets, which still have not been distributed to creditors a decade later, going on a decade anyway. So real quick, let's just talk about some of these. Inflation down significantly year over year, not quite to the Fed's target. Fed's likely to hold this week at FOMC, and it'll probably be a giant nothing burger of a meeting. November is shaping up to be the more important meeting. There's no meeting in October. Dollar strength continues because everybody else's money is way worse than ours. The euro ECB was hiking last week and euro still went lower. We can remain hawkish on this side of the pond much longer, likely than anybody else can, before they need to start easing. And I think that's part of what you're seeing priced in here. And the technicals are undeniably bullish by any measure. The exact opposite of Bitcoin. Oil technicals also extremely bullish. You have record demand with supply cuts and you get $91 oil. You're probably on our way to $100 oil. This is going to hurt the US consumer. This is going to hurt food production. This is going to hurt travel, transportation. So we certainly hope that this comes down. Otherwise, it's going to get ugly for the consumer. One thing to note on oil on the RSI on the daily, it is elevated. Now, this isn't a guarantee of any reversal at all. This, RSI, what oscillators can stay elevated or below 30 for months. It doesn't mean anything outright. What I would look for this week on oil would be some sort of bear div forming, higher high in price, lower high in momentum. Watch for that over the course of the week. Still looks very strong, but it's not just oil. It's not just energy. If you look on any given day, cocoa, coffee, sugar, cattle, I don't know about hogs, but there's some that I've seen lately, olive oil, uranium. Most of those are at all-time highs, many of those pushing multi-decade highs, and that's certainly making its way through something like a commodity index. But that's going to hurt the inflation picture in various ways, likely moving it higher, as well as all these labor disputes, which I didn't even have on that list, but I'm all for those, honestly. Anyway, this also looks bullish, right? And it's basically the oil chart. The index itself collectively looks very strong. If we're talking about regulations, this is one that came down the pipe last week. And yes, they sold an NFT, but they did more than that. You and I could start a business, do a crowdfund, and take $800 and just give people NFTs, right? The SEC argues they did more than that. It certainly looks like they did more than that, including talking about selling them on a secondary market, which is a big no-no, with an expectation of profit. So I think on its face, people say that, oh, why is the SEC going after this NFT project? Well, there's certain things that they did that you can't do, and there's definitely better ways to do what they did. Most likely, I'm not a lawyer. I don't know what I'm talking about, but if they would have just said, hey, we're selling these NFTs, $800 as like a pre-subscription to see these a week ahead of time or something, right? Or just supporting as a crowdfund. probably totally fine. I think they went a step beyond that. But the enforcement actions we're continuing to see in a variety of ways, certainly not solid ground or solid footing for anyone trying to establish any sort of product in the United States. And that's going elsewhere. It's going to Singapore, it's going to Dubai, where the regulatory environment is friendlier and clearer. And I saw this come down the pipe, which I thought was a really interesting, maybe future lens at what's headed our way for regulation. This is specifically talking about the bit license, I believe, but this change to the bit license would effectively take away exchanges' ability to list assets at will. Some exchanges don't have a bit license. Very few have a bit license. Very few businesses operate in New York because of the bit license. Anyway, I could imagine a day where we have effectively a bit license for the United States, where something similar comes down the pipe. Exchanges have tried self-regulatory agencies, SROs, and that kind of has been wishy-washy as far as, yeah, let's just list everything. Nothing's a security, right? When you hear the lawyers say, well, there's 100,000 alts on CoinMarketCap and we only list 20% of them or something, right? I don't think that really helps their cause either. But in any event, this is something to watch as a theme coming forward. As far as geopolitical stuff, I mean, we all know that we're sending a boatload of money to Ukraine. This is an actual number, 76 billion as of a few days ago. It was pretty sad that I had to go to USA Today to actually get this information of all publications, but this is a look at that in context to other government programs. I don't know what the CHIPS Act spending is. I don't know what the IRA, Inflation Reduction Act spending is, but that is also acting on inflation here, undoubtedly. As far as the Binance stuff, I don't really need to go into it, I don't think, but they've had issues. There's been problems, investigations. We'll see what comes of it. But until we have clarity on that front, I think the market is waiting for some closure or finality on what the heck's going on over there. Because it doesn't look pretty at the moment. And if we look at DeFi, we still have not recovered from Terra Luna, FTX, 3 Arrows, Celsius, right? All this stuff. We're not seeing flows, whether that's stablecoins, whether that's other measures in DeFi. But really a big problem is this. The money that's hacked or otherwise stolen, use whatever word you want. Use phishing. I don't care. We just can't have this. We can't have constant headlines of so-and-so got hacked. So-and-so crypto positive individual known in the business community lost 6-figure sum, right? We cannot have this and we can't expect for anyone to want to come into this space, regardless of what Cuban did with MetaMask, regardless of what he clicked, right? It doesn't matter. It's unacceptable, I think, to most people looking on the outside. So if we continue to see these headlines, I wouldn't expect anyone to get excited about DeFi. As far as the ETFs are concerned, here's the updated list from James Seifert on Twitter from Bloomberg. A bunch coming up in October as far as deadlines, about a month away from now. So plenty of time there. Why do I think this will be bullish? It's asset maturity, represents serious people getting into this business who are using custodians in a serious way. Yes, it's Coinbase. Yes, it's BlackRock. It's access to assets that have not previously been accessible. Yes, you can go on any fintech app and get Bitcoin, but the big money, the pensions, the endowments, they can't do that, right? And the BlackRock ETF certainly looks like an eventual inevitability. Before I get to more crypto stuff, let me mention Kraken Pro, today's video sponsor. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. And not only crypto, but they also have Forex, should you be interested in doing something else with your time besides trading crypto. And I have the Euro USD chart pulled up because, hey, that looks just like the Bitcoin chart, doesn't it? Interesting if we will see some diversion correlation-wise from the Euro, from the inverse correlation of the DXY, things like that. We need something on the right side here to bring people in other than an ETF, because we don't have that yet. And the headlines haven't been super positive for crypto that I've noticed. This is a look at the real world asset components, RWA.xyz on crypto, private credit, treasuries, real estate, stablecoins, etc. I hope DeFi Llama just forks this website, honestly, and is done with it. Maybe it's the same people, I don't know. But I'll leave this in the description again if you want to take a look. A narrative that people are getting more excited about. Stablecoins are big because, well, Tether is making money hand over fist. Whether or not you believe that, I don't care. But that's attracting eyeballs as far as other possibilities here for stablecoins that aren't algorithmic like Terra or Luna. If we look at the permission pools part of DeFi, we have early proto forms of that with things like Maple, where they have this kind of hybrid real world asset model with, we know who you are, this is KYC AML'd, right? The pool accepts deposits of blah, blah, blah with KYC. So we're starting to get there slowly. It's very early days, but here's an example of how this could work. You know, all the way back in 2018, ZRX, which is a decentralized exchange protocol, talked about permissioned liquidity pools. So this isn't like some crazy idea that someone just thought of. People have been talking about this for a long time. Now, is it DeFi in the true sense of the word? Probably not. But again, if you want the real money here, this is what you're going to have to do. The real money cannot touch something on Uniswap, for example, and where the other side of the trade could be Iran, North Korea, right? They just can't do that. So you may think that that'll happen one day. I just don't think personally that it will. So that's coming down the pipe. And last week we had one of the mightiest of crypto lenders cease all trading services, Genesis. So I suspect in a bull market, should we ever get one again, somebody will pick up the slack here, because Genesis was an absolute powerhouse for a long time before they made some really bad decisions, you know, from a bunch of people. But Genesis may be gone, but not forgotten. There will be a business that takes this over, whether that's blockchain.com, whether the exchanges start to spin up their own services, whether other external TradFi businesses pick up this type of business, right? Because we lost banking, we lost lending, we lost kind of everything that was sort of adjacent to crypto after 3AC and FTX and Celsius blew up, right? Hey, maybe that needed to happen. But I think it's likely we see businesses of this type come back again. Maybe it's through Maple, right? Maybe it's through something like this. Anyway, let's talk about charts. Again, not much going on. Weekly edge to edge, still not active, still not triggered. We're not in on the Bitcoin index yet. So for me, I'm staying out of this trade. Just as a reminder, you want a bullish ticket cross, which we have. You want price closing inside of the cloud, which we do not have. And then once we're in the cloud, you want price to remain inside the cloud. So the target for that would be 42K. Not there yet. On the daily cloud, we're below the daily cloud still. The most bullish picture we could hope to get from this would be some sort of W double bottom here. Liquidity is so poor, plus or minus 5% on any given day. Wouldn't surprise me. Ultimately, on the daily, to be bullish, I'd want to be back above probably 28.5, whatever that is. So you'd want to see a daily close above 28.5. You'd want to see a bullish TK cross, and you'd want to see a bullish cloud. Very similar to what we saw in the beginning of the year, right? That is a classic go long signal. So we don't have that. We are not bullish in any regard here. On the pitchfork, still meandering around on the bearish half of a bullish pitchfork. VPVR gives us support at 23. If this is truly a head and shoulders triple top throughout the year, then I think that if this gets ugly, level is somewhere between 19 and 21. There's tons of volume support there as well. So if the current low breaks at like 23 and then 20, I mean, that's very likely where we're headed. If things get truly bearish off some news about some exchange exploding, for example, we have a death cross, which historically hasn't meant too much in the pre-halving year. We typically crisscross a few times in the pre-halving year, but it does represent a shift of gears from the beginning of the year when we had a bullish cross. And you can say these are late, you can hate them, I don't care, whatever. When you have an extended trend and a cross of the opposite momentum, it's worth paying attention to. So yes, this could pop back up. This could be the bottom. This could be a 20x from here, but I'll wait till we actually get that crisscross to get excited. As it stands now, certainly not bullish. And again, just as a reminder, pre-halving year, we typically don't do much. We typically have some excitement, go sideways, have some dip, have some random exchange get hacked, have some random global pandemic, right? Something may happen. Who knows? But having the 200 days, so sit tight. As far as ETH is concerned, it's on the verge of failing the year plus ascending triangle and fulfilling its head and shoulders destiny just somewhere around 1200, let's say. For me, a stop loss in any active short is somewhere around 1660, maybe 1650. But this to me looks just as bearish as it has looked, so nothing's really changed there. You can see the VPVR levels at 1550, which we're kind of at, that range, 1550 to 1650. And then the next leg down, probably 1100 to 1300 would be the VPVR level. So certainly reasonable, well within the cards on that front. For ETH's weekly cloud, not in the cloud, yes, the target would be 2800 or thereabouts. Once that edge-to-edge triggers, it's nowhere close. In fact, this may actually get a bearish TK cross within the next couple weeks, which would represent bearish continuation on a weekly time frame, and that is extremely bearish. So we do not want to see that. If you're bullish, in 2018, I think it was, there was a bearish TK cross and then a bullish TK cross. So it doesn't necessarily mean another 80% down, but it certainly doesn't mean 28K. So sorry, 2800. So I'd keep that in mind. Daily cloud also bearish. Again, nothing going on here. 2K or bust. Otherwise, for me, it's an ignore. It's got a death cross as well. No surprise there. Bitcoin leads all. So Bitcoin's got a death cross. More likely than not, everything else below it is probably going to be fairly bearish. And many people have said this, but it's true. Bitcoin's halving is maybe more important for the altcoins than it is for Bitcoin. Okay, this is Bitcoin's halving dates relative to runs for Ethereum. And, hey, we'll see 200 days from now, and then 30 to 90 days from then, whether or not we'll have a run on ETH. Most likely we will. Most likely we will have some sort of futures ETF for ETH in 200 days with talks of a spot ETF. That's potentially happening in the US. But again, you can't really get too excited about that until we're much closer to that date. So right now, I think it's a whole lot of hopium. As far as ETH BTC, again, not much change. Still in the range, still falling, still lower, still expected to be lower. Cloud says neutral. But overall, I definitely expect this to test 0.5 at the very least. And my bearish target would be 0.3 based on yearly pivots here. You could also measure the high to the low of the range and project it down. The inverted head and shoulders neckline could also act as a support, but I think that's about 0.35 or whatever this is as well. So that would be my bearish target long term for ETH BTC, which would be post spot Bitcoin ETF and pre ETH spot ETF, right? Where you'd see that flow imbalance potentially. For alts, again, not much has changed. Still looks just as bearish, still ranging. This is the alt MCAP minus stables minus wrapped Bitcoin. And it certainly looks like it wants to go lower. Many of the alternative layer ones are headed lower. Many of these alts have a descending triangle, which you can kind of see on this chart as well. That has been forming. So it doesn't look pretty across the board. So I think you're either holding alts to zero for multiple years, waiting for the next cycle, or you cut your losses and you move on. That's up to you. Obviously, not financial advice, but something to consider. Then lastly, S&P. I continue to think this looks extremely bearish. This looks toppy to me. The cloud tends to agree. We're not in the cloud just yet. But if the S&P rolls over, if tech rolls over, if the Elite 8 roll over, it's probably a good night for crypto as well. Can't imagine we are bullish here in crypto land while US equity markets are bearish. So this could be head and shoulders. This could be a diamond top. This could be a rounded top. This could be an edge-to-edge move to the 200-day moving average to 4,200. This could be a lot of things this week or throughout September. Maybe it just chops around. All in all, I don't think this is bullish at all for the S&P here. And until we see higher highs, ranging or down, neutral is the most likely outcome for me. So that's all I have for this one. Like, comment, share, subscribe. Hope it was informative. Something that isn't your usual, sideways neutral, boring talk when nothing's going on. Happy trading.